Welcome to the May 1st, 2023 Advanced Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, with your weekly fast-paced tour of the global financial markets. I'm also president, McGowan Group Wealth Management, a team of 10, a team dedicated to your success as an investor. And this YouTube video that we do for our clients is proof that we're doing the weekly research that can help you make great decisions as an investor. Because if you understand what you own and why, then you've actually got the basis for great decisions, and a bunch of scary headlines are not going to scare you away from perfectly good assets. I'll cover a little bit about that. Now first, this is Dallas, by the way, home prices, actually North Texas because it's the metro area. However, before we get to that, this week's inflation number, the Fed's preferred measure of the inflation, is the personal consumption expenditures, PCE, personal consumption expenditures. It dropped by nearly 1% trailing 12 months and came in actually at 4.2% for the 12-month period. What does that tell us? It tells us that the Fed has reached their academic target of where the short rates need to be, because academically they use the Volcker thesis from the 1970s, and you got jack up rates to equal the 12-month inflation. Guess what? They now have the Fed funds rate above their favorite measure. And that means that they've gone too far by their own definition. It signals the end of the tightening cycle, and I'll get to the impact on the Dow in the next slide. But first, here in North Texas, what happened to the price of your house? Well, you've heard a lot about the housing correction. We know it's really bad on the West Coast for a variety of reasons, but Dallas is strong. So North Texas homes are down from the peak. Okay, I'm going to give you bad news and then good news. Minus 8.5%. So that's the drop from the summer frenzy. This is when there were bidding wars and we felt like there wouldn't be enough houses. Well, the housing market actually, new home sales actually did pick up last month. So it's not totally frozen and it doesn't look like a housing depression. Commercial real estate and real estate investment trusts, I wouldn't touch that until at least December and maybe December 24, because they got to refinance a bunch of real estate. Here, though, the good news for North Texas, we're a plus 2%. Now that's not much. The average annual appreciation for homes has generally been about 4%. Well, it's 2% after this drop. So that's the bad news and the good news for North Texas home prices. Now we're going to get to this week in the Dow. So the Dow has the big old March Madness swoon, goes to 31,400. The peak for this year was in January, 34,300. What happened this week? We're back to 34,000 at the close of the week. Now, if we've got a looming recession, inflation, and another bank failure, we'll get to that at the end here. So that's the third bank failure. This was the first two. What's the Dow doing back at 34,000? Well, first, inflation's coming down. And second, earnings expectations were too low. And I'll get to some of the examples here in just a second. This is the new forecast for GDP going forward. So GDP came in at 1.1% annualized growth for the first quarter. It was 2.6, and before that it was 3.2. Wow, and we had a little recession last year where if you subtract inflation, the dollar growth in the economy was less, and so you fulfilled the official definition of recession over there. So what about the recession? Okay, these are the learned economists in Bloomberg, and we assume they're smart, but they're not always right. In the fourth quarter, they projected like 0.2%, 0.4. They were projecting a minus sign for the first quarter. And The long-awaited recession could show up in the third quarter and the fourth quarter, but it's a measly minus 0.6 and minus 0.3. It's not like a 2008 or a 2002 type of recession. But then what happens? This is the important intelligence. First off, they've been too low on their forecasts, and here we go to 1.8% economic growth. Not too hot, not too cold at the middle of 2024. That'll start to get anticipated in the equity markets, I believe. Here we go. Now, this is crude oil, and I'm going to call this the recession dance, okay? So crude oil starts the year up here at about 80 bucks. Then we go to 80, and ooh, we have a January swoon. Look at this. That's when the banking system was in question because Silicon Valley Bank failed and Signature Bank failed. And we did the recession dance, went to 64. Then we popped right back up to 83.53, the high of the year. Now we're back at about $75. So part of that is the recession dance because they think there's going to be demand destruction in oil. ExxonMobil and Chevron came in with earnings better than expectations. But here's the key on the oil industry. It's trading at 5 to 7 times cash flow. If you could buy real estate at 5 to 7 times cash flow, well, if you're experienced in real estate, you would do that all day long and maybe lever up to do some of it. So that's where the bargain category is because it could double just on valuation alone. Now, here we go. Look at this. We've got 265 out of 500 S&P 500 companies. And what has happened? We've had an earnings recession for about the last 2 quarters. We're a minus 2%. But guess what? That was way better than expected. Minus 2%, okay. What happens after that? Well, according to the projections, this number starts to rise and rises by potentially 20% to a new high in earnings between now and mid-24. Wow, there's got to be some bargains out there. After 15 months of Federal Reserve torture, that's coming to an end. Why? Because they reached their target and inflation is coming down. What's the next phase? If you look at the bond market inversion, it could be telling us that by 2024, rates are headed back to normal, and all those valuations that got tortured by the Fed tightening cycle, they begin to fill back in. That happened 2018 tightening, and we were worried about a recession. Well, as soon as they said, well, we're just about done, things went up by about 20%. So, didn't take long for that to happen. Top 10, bottom 10 S&P performers over the last 90 days. This is an intelligence report that you just can't get anywhere else. So, who's the superstar? Facebook, Meta. Well, NVIDIA, they have an AI chip. Everybody's excited about AI. Some people think it's going to be a big old conspiracy and AI is going to take over. I'm going to just remain agnostic on the AI. But we've used it here to do research, and it actually turned out pretty good. Chipotle Mexican Grill up 23% in 90 days. Microsoft, a superstar this week. Their earnings came in great, and revenue was up, and they skyrocketed during the week. Most of this 25% was at 23% was actually done this past week in Microsoft. Great results. Here we go with the bottom. It's pretty much all banks. Albemarle is a chemical mining company. They play a part in clean technology. Comerica, based here in Dallas, down 43%. And here's the banking crisis. First Republic Bank down 95% in 90 days. That stock peaked in 2021 because they had a bunch of fancy technology clients and they were $200. And here we go, less than 18 months later, they're $5. So they're going to have to duct tape something together to save First Republic. That'll be a big story next week. In the portfolios right now, medical dividends, energy infrastructure, global high yield bonds, which could benefit from rates going back to normal. That would elevate values back to par. Those are the core strategies right now, in addition to some clean technology additions and some solar component companies that are making a lot of money. So if you want to upgrade your plan, come down to the Crescent, meet the team that cares. We serve affluent families right here in North Texas, and we're happy to do a Zoom brainstorming session with you as well. Thank you for tuning in. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.